Oklo, a nuclear fission startup company backed by Sam Altman, has plans to become a public company by merging with a special purpose acquisition company, or SPAC, co-founded by Altman himself. This news was officially announced by the company on Tuesday. This prospective deal is likely to contribute to the recent trend of nuclear companies going public through SPAC mergers. The trend will also serve as a test to determine investor interest in clean energy startups. These had experienced a surge in 2020 and early 2021, but have since lost some popularity. Companies like Oklo, which are attempting to pioneer a new generation of smaller nuclear power projects, are faced with the challenge of proving that they can deliver their projects on time and within the budget. This is in contrast to the larger nuclear plants that have historically been the norm. Based in California, Oklo is in the process of developing a design for a small modular nuclear reactor. Their plan is to sell electricity into the competitive power market. This includes entering into contracts similar to those often made by wind and solar developers with corporate and industrial firms, who are looking to purchase carbon-free power. Sam Altman, who is also the chief executive officer of OpenAI, believes in the potential of the nuclear energy industry. OpenAI is the artificial intelligence startup responsible for creating the popular ChatGPT chatbot. Altman asserts that the nuclear energy industry has the capacity to produce electricity that is more cost-effective than any other current alternatives. Nuclear fission is capable of generating energy without producing greenhouse gas emissions. Unlike other energy technologies such as solar power, nuclear fission is capable of generating energy around the clock. In fact, nearly 20% of the electricity consumed in the United States is generated by nuclear fission power plants. This transaction values Oklo at approximately $850 million. Rather unusually, the company is going public by merging with ALTC Acquisition ALCC, a SPAC co-founded by Altman and Michael Klein, who is a former Citigroup banker and a seasoned creator of blank check companies. Also known as blank check companies, SPACs are essentially shell companies that raise capital and then go public with the sole purpose of merging with a private company to take it public. Once the transaction is approved by regulators, the SPAC is replaced by the private company on the stock market. Such transactions have gained a notorious reputation for primarily benefiting company insiders at the expense of other investors. In fact, there are at least a dozen startups that went public during the SPAC boom and have since filed for bankruptcy. Many more are quickly depleting their financial reserves. Even in the volatile domain of special-purpose acquisition companies, or SPACs, it's unusual, albeit not unheard of, for an investor to take a company public through their own blank check company. This kind of arrangement could potentially raise concerns among other shareholders regarding the fairness and benefit of the deal to them. ALTC, Altman's SPAC, is nearing its deadline to complete a deal, or it will be required to return funds to its investors. This raises questions about the timing of the Oklo merger. ALTC and Oklo have stated that they have been working on this transaction for 9 months. They also shared that ALTC had signed a letter of intent that extended the deadline by 3 months. Altman himself opted out of the transaction review and approval processes from both sides. The companies stated that Altman, along with Oklo's founders and Klein, agreed not to sell their shares until a significant period after the closure of the deal. ALTC currently possesses $500 million in cash, which could be used by Oklo to expand its business operations. However, this figure is expected to decrease as SPAC investors can withdraw their funds before the closure of such deals. The market turbulence over the last couple of years has led to many investors doing so, which has made it difficult for companies to raise substantial funds from these transactions. Mergers lacking simultaneous private investments, like the proposed Oklo transaction, have often underperformed. X-Energy, another small modular reactor startup, is trying to go public via a SPAC supported by the private equity firm, Ares Management, in a deal valued at $1.8 billion. The two parties involved reduced the valuation by $300 million last month. NuScale Power, a competitor, went public through a blank check merger last year, and its stock has since decreased by about 25%, which is less than the average decline for companies that went public this way. Altman commented on the current challenging environment in the SPAC world, saying, "It has been a difficult year in the SPAC world, but I always try not to pay too much attention to trends and look at each opportunity. Altman is also a supporter of the nuclear fusion startup, Helion Energy, which signed a deal with Microsoft, believed to be the first commercial agreement for fusion power. Fusion power systems like Helion's could theoretically produce electricity from the energy released when hydrogen and helium are combined, which is the process that powers stars. Microsoft has agreed to buy electricity from Helion in about 5 years. Both Oklo and Helion plan to compete directly with other forms of power generation, rather than asking utility companies and their customers to commit to funding projects with uncertain first-of-a-kind design costs. Oklo aims to deliver its first reactors in Idaho and Ohio and will have to navigate a stringent licensing process with the U.S. Nuclear Regulatory Commission. The company is also developing nuclear fuel recycling technologies with the U.S. Energy Department and U.S. national laboratories, which would provide fuel for its reactors and others. Altman has had a long association with Oklo. He met the founders in 2013, around the time they started the company, brought them into the startup accelerator Y Combinator in 2014, and invested in the company, becoming the board chair in 2015, a position he still holds. Altman believes that the goals of making artificial intelligence and energy cheap and abundant are interconnected. He said that AI systems of the future will need tremendous amounts of energy, and this fission and fusion can help deliver them. He also added that he expects advanced AI to contribute to nuclear system designs in the future. Several developers worldwide are testing small modular reactor designs, but there are currently no such reactors producing electricity in the US, nor are there any under construction. While supporters argue that smaller-scale reactors could prove cheaper and faster to build than their larger counterparts, skeptics say the initiative is a gamble on a technology with unproven economics. The earliest such reactors could be available later this decade. Jacob DeWitt, co-founder and CEO of Oklo, said the company aims to avoid repeating the mistakes of the past when utility customers bore the increasing costs of building a reactor. DeWitt commented that traditional business model is just very difficult to deliver and to execute on.